Yeah. Hi, everyone. Welcome to the Eno Center's Rising Construction Costs webinar, Implications for Reauthorization. For those who are not familiar with the Eno Center, we are a nonpartisan think tank focused on transportation policy at the federal level. We also provide professional development programming across the country, and we're so excited to be here. We have two amazing panelists joining us today. We have Dr. Allison Primo Black, who's a senior vice president and chief economist at the American Road and Transportation Builders Association. We're also joined by Susan Howard, the director of policy and government relations at the American Association of State Highway and Transportation Officials. So before they get into their intros, I'm just going to give a quick background on the topic here today. So on the next slide, in August, the Eno Center published Rising Construction Costs, Analyzing the Contributors to Cost Escalations and the Impact on Federal Transportation Infrastructure Investments white paper. So this white paper can be found on the Eno Center website in the research library. And the impetus for this paper was questions that we were hearing a lot on the Hill about what was the impact of inflation on the federal spending that came out of the IIJA. So on the next slide, one of the first things that this paper explores is really looking at different deflators and ways of measuring the impact of inflation on transportation dollars. And as you can see, there's a really interesting effect going on here where the NHCCI, which is produced out of federal highways, is showing pretty significant cost escalations throughout the pandemic and post-pandemic period. It's significant to note that this number is based upon bid prices, whereas you're seeing divergence with the PPI that comes out of other agencies, which still is showing inflation, but from the component perspective and is not as significant. So one thing that the paper explores is looking at, what is causing these divergencies and what does that tell us about what is going on in the construction cost environment. On the next slide, you'll see some of the factors that we explored as contributors to construction cost escalations, including supply chain disruptions, materials and input costs, labor market shortages, demand side increases, number of bidders on projects, state capacity and reliance on consultants, and then some additional possibilities of borrowing costs, regulatory costs, higher quality project requirements. And I think one thing to note about all of these different factors is there's not one input factor that is causing the cost escalation. It's a confluence of these things. And the second thing is some of these are, directly a result of pandemic factors, whereas some of these factors, such as the number of bidders on project, have been going on for, decades of trends. So it's important to note that while the pandemic was very influential in the change in the cost environment, it was not the only reason that we're seeing a higher cost environment. So on the next slide, you'll see some potential implications, which we'll talk about more today. But like I said, although the rapid rise in inflation has moderated, we're still in an elevated cost environment. And this is very important for states and local agencies and the industry as they, navigate future uncertainties and as they navigate surface transportation reauthorization. So with that, I am excited to turn it over to our panelists who are going to provide more insights into what's going on in the cost environment and also how states, local agencies, and the industry can respond.
There we go. I have to make sure I'm unmuted. Hi, everybody. Once again, great to be here. I'm Allison Black. I'm Chief Economist, Senior Vice President with the American Road and Transportation Builders Association. So we do, and in my daily job, I track a lot of these issues that Grace was talking about, and I've got a few slides to just walk you through a couple of things that we're keeping an eye on. And the first slide I have, it'll look a lot like one of the ones that she put up. And what I wanted to do is just take a minute to walk you through how on the economic side, we look at several different indices that we track that are telling us different things about not only costs in the industry, but what we're seeing in terms of bids and projects going in. So that orange line, the National Highway Construction Cost Index, is really, it is not intended to be a deflator of overall industry spending and what's going on when you look at actual spending for highway and bridge construction. It is a reflection of the bid prices. As Grace said, it's capturing about 2/3 of the items that are going into bids. So it's really looking at standard items that are part of bids over a period of 4 to 8 consecutive quarters. So a lot of specialty items, things that are related to public-private partnerships or some design build projects aren't going to be captured in there. But it is really giving us some insights into a couple of the things that Grace brought up. You can see that orange line for a number of years, going back to 2017 up till 2021, ran parallel, but just above the highway producer price index. And what that highway and bridge PPI, that's published by the Bureau of Labor Statistics, and that's tracking a basket of goods over time. So it's looking at relative changes in that basket of goods, things like asphalt, concrete, cement, a whole host of different things that go into highway and bridge construction. So over time, that's really looking at what contractors are paying for materials, the cost of those materials, whereas the FHWA highway, the National Highway Construction Cost Index, is very dependent on what's going on in the market at that moment. So the project mix, the number of bidders, all of those things, any uncertainty, that is all going to be built into and be reflected in that National Highway Construction Cost Index. So it is giving us some really important information. But what I wanted to point out is what you see in 2021, both of those indices start increasing significantly. And what the convergence of those lines really represent is that you had costs going up for contractors, very, very high increases in costs that were not necessarily being passed through in bid prices and bid strategies and what the state DOTs were seeing in bids coming in. A lot of those issues we thought were temporary on the economic side. Maybe some of those pressures, we didn't see them as being structural or longer term. So that really was a time when if you have a fixed cost on a contract and all of a sudden your prices are going up dramatically, that is something that for many contractors, they were paying for that and covering that cost. But you can see again, and what we see the later years with the infrastructure investment, the federal bill, the additional investment, we really have seen, I'll show you this in a second, a different mix of projects. And I think that is one key thing that is really driving some of this divergence. And then the last indicator, the light blue one that we track, that is more of a true deflator, looking at things like labor, productivity, a variety of other factors. That's what the Bureau of Economic Analysis uses to deflate different data series to try and get an idea of real spending in terms of highway and bridge construction. But the next slide is just going to show when we think about the last few years, the federal investment. So just considering federal dollars, which are a major, major part of the highway and bridge construction industry, what we do each year, we get a really big data dump from the Federal Highway Administration of the types of projects that are moving forward with federal funds. And you can see here, I wanted to point out, we've seen a significant increase in those projects that are adding capacity. That's about 25% of the value of all projects that moved forward in fiscal year 2024. And new construction was about 7%. So adding capacity is going to be putting adding a new lane, could be widening lanes to an existing right of way. So that's a much very different type of project profile, and what's going to be needed to deliver that project is much different than what we would consider reconstruction and repair, which is traditionally where most federal dollars are going. And you also have, I don't have a slide on it, but we've seen a significant increase in federal funds being used to address bridge conditions and bridge issues. And those bridge projects, again, very different profile of funds that are needed and the spending and what goes into that project and the risk and all of those things that are going to help change that bidding profile over the last few years. So the next slide just shows a little bit about some of the other things that we track, because really the question is, well, we know prices are going up. We know just in general, these bids are including a lot of other things. So what are we getting for those dollars, and how do we measure real investment? So besides using one of the deflators, the BEA deflator we were looking at, we look at things like the number of awards. So this is data that we get each month from Dodge Data Analytics. This is covering state and local government contract awards, but you can see for highways and bridges, significant increase over the last few years as we've had those additional federal dollars and some state funding increases in the marketplace. So this is the type of data that we look at to try and get an idea of real investment and some of those other trends. And then the last slide I wanted to show was just the employment levels. Now we are a little bit limited. This is just looking at July employment, which is going to be the peak of the summer construction season. Normally with the shutdown, we don't have the latest data. We're behind a little bit, but this at least gives you an idea. During that summer peak construction season, you can see compared to 2021, highway and bridge contractors had added 35,600 new jobs. And one thing we say is if there were not more real work going on out in the marketplace, you would not see more jobs being added. So again, this is just another piece of information that we look at trying to figure out, because again, those different price indices, depending which one you use, you could have a very, very different view of what's going on in highway and bridge construction. So we take all of those data series and try and combine it to give one holistic view. But I think bottom line, things are costing more. The types of projects and investments which were intended to be made under the current Federal Surface Transportation Program, we're seeing those big major improvements. And I think we're seeing that in some of those prices being in the bids.
Thank you so much. I'm going to pass it off to Susan.
Thank you. Thanks, Grace, and thanks, Allison. That was very interesting. It's always great to follow an economist, I'll tell you that. So no, very interesting and informative. Thank you so much for inviting me here today to give the AASHTO perspective. For those of you who aren't familiar with AASHTO, most of you probably are, but we are the National Trade Association that represents the 50 state DOTs plus DC and Puerto Rico. So this issue and the rising construction costs and the impact of the IIJA spending levels, what the real impact of those have been in this new kind of high cost environment has been a big issue and concern for state DOTs over the last few years. It's really interesting to hear about the different cost indexes and measurements, because I think we kind of live and breathe at AASHTO with the National Highway Construction Cost Index. So it's really interesting to see the other lines on your chart, Allison, there that show some of the different ways of measuring this. I would certainly agree with Allison that there's probably not one single factor that has, gotten us to this place. States have definitely experienced lower number of bidders than usual in terms of, putting out bids and seeing only a handful, when in previous time there's a lot more competition and diversity in those bids, which allowed for, essentially better pricing. High material costs. I know during the pandemic did a survey of our members across the country, and there were high material costs in every part of the country. It was just a matter of which one were the highest where you lived, depending on what state you lived in and where you were sourcing those materials from. So that's been a big concern. And labor market issues, as we've discussed. So states are, trying to adjust to this new cost environment. It's very difficult for states when there is really any uncertainty around federal funding. And that uncertainty is very real right now, not just because we have only one more year left of the IIJA, but there are other factors out there that I think are on state DOT's minds. One that's not mentioned in the Eno report, is Build America, Buy America, particularly manufactured products. That is, I think, one that is of high concern to our members and how it may impact project cost as it is implemented. Of course, state DOTs are very supportive of domestic manufacturing and growing that base, but we do have a really new situation here with a whole complex category of materials that have never been subject to Buy America requirements being subject to them. So I would mention that as one kind of future thing to be thinking about. The other is tariffs, and you do mention tariffs in the report, and I think that is a big question too, and how those may trickle down to construction costs. And so those are a couple of things that we're really looking at. I wanted to really focus today on my comments on sort of looking forward and understanding how we can contextualize all this in understanding the baseline for a new highway bill. So we are, as mentioned, a little bit less than a year from the expiration of the IIJA. We are really trying to understand what the new baseline could and should be, taking into effect the inflationary impacts that we've seen. When state DOTs are forecasting for the next reauthorization bill, they really assume that the last year of the previous bill, without inflation adjustments, will be sort of the baseline. State DOTs never want to overestimate what they may have when doing forecasting. You never want to over promise and you have to under deliver or have to cut projects. So there's a real pragmatism to this and a real science to it as state DOTs look to make their revenue forecasting when it comes to the federal side of things. So we're in a real state now of uncertainty when it comes to that. I don't know that we can count on the previous levels of the IIJA, the last year levels of the IIJA being the new baseline. It's also complicated by the fact that we had so much advanced appropriations spending in the IIJA. A lot of that went directly to states as well. So it's not just a matter of looking at the core highway formula programs funded through the Highway Trust Fund. We have this whole category of advanced appropriations that went, both to formula programs as well as discretionary grants. So if we get to a point where we're looking at the new baseline and it does not include any advanced appropriations as Congress is working on the size of this bill, that could have a real impact on states' funding. Even if those traditional apportionments continue, even if the traditional apportionments we're used to through the Highway Trust Fund continue at whatever level we can have them essentially. So all this goes to say that I think there's a lot of a risk, so to speak, that DOTs are trying to grapple with in terms of how they can predict what federal funding might be available to them over the life of the next bill. Certainly AASHTO would be, and AASHTO and ARPA as well would want to advocate for, baseline spending being the high water mark of the IIJA. We are probably facing some external realities that may not make that possible. So how you kind of skin that cat to determine what your real or adjusted baseline might be, I think is something that's very much on our minds and we're trying to grapple with. So again, the last thing I would mention is just the challenge of communicating all of this to the public. We certainly at AASHTO, a huge priority for us is showing that we deliver the program. You've invested these federal dollars, you've entrusted state DOTs and local governments with executing projects, and we want to demonstrate that. Certainly anecdotally, my members will say that because of the inflationary impacts, the IIJA was really essential to keep things going on track. And it might not necessarily have moved the needle on every dream project we ever had as state DOTs. That's just a harsh reality, but that's hard to explain to the public when we had such a historic increase in funding with the IIJA. We want to make sure that we're communicating how and why we've had these cost challenges and how we're, able to pivot to still deliver the program despite some of the external factors that have had a real impact on again, sort of just the amount, the length the dollar can go, so to speak, the length the federal dollar can go in this environment. So I'll pause there. I look forward to your questions. Again, thank you so much for having me and including AASHTO in this webinar.
Yes, thank you so much, both Allison and Susan. So insightful. We're going to transition into the Q&A and definitely want to keep discussing the points that you brought up. So please, all participants, if you have a question, place it in the Q&A and we'll try our very best to address all of them. But in the meantime, I think it would be great to follow up on that point, Susan, that you just made, talking about communicating about both the impact of inflation and how still projects were able to move forward. And this was a point that was also made by Allison. So I'm curious if you could talk more about how both of your organizations are doing this. And, are there any key differences between communicating with people on the Hill versus communicating with the public and other stakeholders?
Yeah, I'm happy to jump in. So we are trying to tell that story, and I think it's so important to talk about the projects and the benefits and what the investment has delivered. And certainly, as I pointed out in the slide, we've seen some very big major intersection improvements. So those dollars are really going towards big projects, things like the Brent Spence Bridge. The top 5 projects that have moved forward this past year, 3 of them are major bridge projects that have been on the books for decades. So we are seeing a lot of those big things move, but we also see a number of smaller projects, and we have profiles on our website that are facing out to the public that really underscore how important these projects are to the community. And even though those dollars may not be stretching as far as we had originally hoped because of the challenges with projects and costs and just prices in general, over the last few years, what we do is try and look at things like, okay, the number of bridges being fixed. There are 5,000 more bridges in the first 3 years of this bill compared to the first 3 years of the previous bill, the FAST Act. And I know that's a little bit in the weeds, but especially for members of Congress, their staff, people on the Hill, we want them to see that those dollars are still making very significant improvement. So we have our highway dashboard that's updated each month where people can go and see those projects, not just a dollar sign, but what's actually being done.
Yeah, I would definitely agree with that, and very grateful to ARPA for their dashboard. Um, I think that definitely, I think this, as we know, all politics is local. I do think the small project piece of this is important. I think a lot of the stories that we're hearing from our members are about the maybe like, I don't want to say neglected, but sort of like under the radar type local project that has a big impact on a community that might not be your traditional idea for a ribbon cutting, but really has an impact there. Our president, Garrett Ugolito, talks about an example of that in his home state of Connecticut. But yes, I think it's been a combination. It's been some major projects. It's been some, as Allison's chart earlier showed, rehabilitation, and that's not the most exciting thing in the world, but it's necessary, and it's such a huge part of our system and keeping things safe and efficient. So I think our members really, want to be able to talk about those kind of day-to-day real world things too, not just the flashy new project, but that's a part of it too. So I think it's kind of been across the board, but definitely we have a focus as well moving into reauthorization to focus on benefits, and how that investment has delivered across the country.
Yeah, awesome. I'm also curious about, are you talking with your organizations and other stakeholders about, some potential risks that the industry is headed into, especially given the fact that sometimes these risks can contribute to higher bid costs?
Yes, I mean, I think the biggest risk for us right now, Grace, honestly, is uncertainty. And we're facing it not just with the next reauthorization, but with the situation we're in now with the government shutdown. And uh, full year obligation has gone out to states, but with a big asterisk and caveat that if we have a CR, it could get pulled back. That kind of uncertainty, as I mentioned earlier, our folks are conservative when it comes to these commitments, and there's a trepidation about moving too far forward on letting bids if there's any chance that the federal funds won't be there when we need them. So we're nimble. We've dealt with this before. We've dealt, almost every year now we deal with the CR, and we've dealt with government shutdowns before. But I think it puts a little bit of a pall on things, and a little bit of an extra risk factor where everyone is just sort of wondering, what should I do? Like, what can I count on? If anything, what should I not count on? And so it can be a tricky thing to balance because the program doesn't stop. Like the projects still have to go. even if we're in a CR, even if we're in a government shutdown, even if we're in an extension of a reauthorization bill. You know, if we've gotten to the end and have to do an extension for some duration, we still deliver the projects.
Yeah, and I think that broader economic environment that we were talking about, that definitely has really just, I think just kind of cast a pallor over everything in terms of the issues with tariffs. And it does come down to that uncertainty. And in this world, in this industry, that uncertainty, whether it's funding, whether it's the reliability of getting materials in a timely fashion, you know, all of that affects the cost of delivering these projects. So if you have a contractor that usually in the past, they could count on getting certain fixtures or materials within a couple months, and all of a sudden their lead time is 6 months, 8 months. It's that uncertainty that they're going to have to price in, and some of the labor challenges as well. We do know that, as I showed, workers are being hired, but wages are going up to attract that labor, especially in areas that might be more rural, where you have to attract that labor and you might not have as many bids on those projects. So all of those things factor in.
Definitely. Thank you so much. We have some questions about, are there potential legislative changes that could be made in reauthorization to help to mitigate some of the things that are contributing to elevated costs?
Well, that's a great question. I think I think if we want to get to the heart of, well, one example off the top of my head is just related to Build America, Buy America and the waiver process, which is not fully, I think, developed and functioning at this point, in a way that gives states some certainty. There are probably process improvements, and again, when you're looking at the life cycle of the project and at what points you have to have kind of clarity to move forward to get that low cost in when you can and nail that down. That's one that jumps out at me right away in terms of the regulatory landscape when it comes to something like that. But I'll think about it and defer to Allison.
Yeah, definitely anything that can streamline that regulatory environment and is going to help, because there are a lot of things that go attached to the federal aid highway projects, and regardless of the intent, whatever, it just, those things add to the cost. So to the extent that those things can be streamlined and done in a thoughtful way to help deliver projects or to shorten the time. Again, when you look at some of these projects, just decades of going through the environmental review process, and those steps are necessary. But if we can tighten that timeline or continue to make progress in that area, that's going to help a lot.
So in addition to, these conversations that are happening heading into reauthorization, we know that both states and the industry are having to deal with these costs in real time. I'm curious if there's any lessons learned that you've seen from members about how to kind of navigate these uncertain times.
Yeah, I think the contracting community just being very strategic about risk. I think you see probably maybe try not to overextend themselves. I think where we see the industry and with Susan's members, the DOTs, where they work together very well to deliver a program, to think about how projects are going to be put out to bid, the flow of that, and other things going on. That's where I think we see some really successful partnerships between owners and the contractors delivering the projects.
Yeah, that's a great point. I would say for state DOT folks, it's a lot of it is that sort of nimbleness, finding the right, the sort of right scope, right sequencing, right type of funding, whether it be federal funding, state funding, right time. I think that you have to think about all this as part of a really big jigsaw puzzle, and with even with like levers on top of like something's up, something's down, you have to move things around. So I think that nimbleness has been quite on display with our members over the past few years as they dealt with both the pandemic and then the rising costs and then the uncertainty around federal funding.
Definitely. We have a number of questions about the impact of labor supply shortages. So I'm curious about how you've been tracking these numbers and also, if there's any potential changes that you think are needed to.
Yeah, that's a great question. So we do a lot of trying to dive into this at the local level because, when you look at the national level, wages on average the past year for highway and bridge contractors on average are up about 5%. And most of the increases we've seen have been in line with other increases throughout the economy or the construction industry. Yet we know from our members that there are areas where wages go up significantly more than that. And what we found is when you really get down to that local county level, we see highway and bridge contractor wages really go up in some of these markets where they might not be in a major urban area. It could be a smaller city, a rural area where you might be getting more projects because there is more money flowing, whether it's through the federal investment or state revenue increases that we've seen. So all of a sudden, an area might have 2 or 3 major projects getting underway, where in the past it might have only been one, and all of a sudden they have to start attracting that labor and getting companies to bid on those projects. So that's where we can see labor going up double digits, 10, 15, 20% year-on-year increases in labor costs. And then in urban areas, depending where you are, you have a larger pool of labor. So you may not see price increases like that, but it can definitely, it's a challenge. And I think the other thing too is we've seen a lot of investment over the last few years in manufacturing facilities and a lot of other economic areas where we have crossover between these pools of labor. So some states that might be oil and gas, others, as I mentioned, manufacturing, construction, battery plants. So all of these things contribute to that, but anything that's going to reduce that supply of labor, it is a challenge. And again, that's where I think we'll see some additional productivity investments. Productivity gains are going to have to be a part of the future of the industry. That's going to help us get more work out of the labor pool we have. But definitely, we always need more labor. That's always been the case. But it can be challenging right now.
Yeah, that's great. I don't really think I have too much to add other than just to plug that AASHTO within the last few months brought on a dedicated staff person to work on workforce issues because, again, this has been, her name is Jill Highland. She's great. It's really been this whole thing, like across the industry. We know our own state DOT workforce is aging out and retiring. We know we have issues in the construction and consulting and contractor world. It cuts across it all. So yes, definitely think that it's a big part of the bigger picture here in making sure that we're bringing new people into the workforce and then that we're able to meet those goals.
Definitely. We have a question about long-range capital planning. And for those looking at longer timelines, do you see cost curves normalizing, or do you see current factors manifesting into longer-term impacts?
Great
Allison,
question.
what do you think?
And we thought a lot about this because it used to be, and I've been doing this long enough, you would look at the consumer price index, you'd add a percentage point to it, and that could be kind of your estimate of project costs. Like that, and for many, many years, that was the case. I think longer term, I do not think we're going to see prices go down per se. I think we will continue to see some moderation, but it does, and again, that technology innovative piece, it is going to be key to helping to keep some of those costs down. But I think in the future we should see things return to that moderate growth in project costs, but I think it's going to take a little while for us to get there. But that's a challenge.
Yeah,
That is a
definitely.
big challenge when you're thinking, and for many of these projects, that's exactly how you have to think, because I mean, the Brett Spence Bridge, we're at a point now where that work is about to really get underway. But that project, we've been talking about it for decades.
Planning for decades. Yeah.
And building those cost increases in is a big challenge. So that's where, and again, some of the innovative delivery mechanisms for projects where it's a good fit for design build or progressive design build, or all of these kind of tools in the toolbox, it makes sense because you can shorten that delivery horizon and keep some of those costs in check, hopefully.
Yeah, definitely. I'm curious if you guys have any examples of states or projects that you think have been able to be innovative and adaptive in this time period that others could look to.
I hate to call out my favorite children. Um, okay, so like with AASHTO, we have such a diverse, membership in terms of the size of our states and their approach to this. So I guess I would just real quick mention a Utah as a great example, a Georgia as a great example, who I think are doing very innovative things and trying to kind of meet things where they are. But again, there's great examples across the whole country, and it's just a matter of, again, I know I hate to repeat myself, but like again, you've seen one state DOT, you've seen one state DOT. I think that there's really a lot of specific things that are unique to the climate in that state and the projects that they're working on. But across the board, I think we're just having to be, as I said before, be more nimble, be more exploratory, and again, try to move the needle with some of these factors that are beyond our control.
And I think too, one thing we see from states are different approaches to raising their own transportation revenues. And that's been one thing that, there's always the question of, oh, if we increase federal funding, are we going to see a substitution effect? Meaning, will states just pull back on money they would have spent because there are all these federal dollars? And what we saw, we track all 50 state DOT budgets, and what we saw over the last few years and what we've tracked in terms of revenue increases is that there are a number of states that have raised their revenues, whether it's user fee revenues, raising the gas tax, or you have states like Tennessee that have put significant general fund transfers towards transportation. Florida did that as well. So there are a number of states that have really stepped up to supplement, in addition to what the federal investment, that major increase to really help drive that. And Utah and Georgia being two of those states as well. Virginia is another one where I think we see some of those, not only those innovative project deliveries, but also increasing revenues and diversifying those revenue streams.
Awesome. I'm curious, as continue the process of, hopefully getting closer towards surface transportation reauthorization. Are there any key things that your organizations are watching? Any like conversations or messages that you're hoping, get out in this period?
Yeah, we definitely put out a whole reauthorization proposal, and just getting to the funding side, our recommendation was at least the first year of a new bill, let's at least increase it to restore the purchasing power, just looking at the consumer price index of the original intent of that bill. So let's at least get it to where the original authors wanted us to be, with that big increase in investment. And the other thing I would add to, something that we track closely just this past week, we look at state and local ballot initiatives related to transportation funding. We had a number of local measures that were on the ballot, and 82% of those were approved. There is enormous support at the local level for investing in transportation. So I think the American public is, especially when they can see what's the results and benefits of the investments being made, are usually very, very supportive of transportation investment.
Yeah, definitely looking at those ballot initiatives this week.
Yeah, it's always very interesting. AASHTO too is wouldn't be surprised, pages and pages of recommendations and reauthorization from top to bottom, like a lot of different detail on different subject matters. So there's a lot to delve in there. In our conversations with the Hill, I think that we've kind of been focusing on what I like to call the 3 Fs. None of them are a dirty F. But funding, as Allison mentioned, figuring out our new baseline and wanting to really build upon the investment in the IIJA. Won't be any surprise that formula funding is a big part of that for state DOTs. And then flexibility, recognizing that you've got to have that built-in flexibility for each state to meet the program needs that they have and program goals that they have. And we're really focused too on just like, on really delivering the program. I think that with all of the extra funding that we got with IIJA, it really is incumbent upon us to show that we have been good stewards of it and delivered, and that's our goal, is to get this funding spent efficiently and for the benefit of the people. So those are some of the things that we're really, I think, focusing on in our conversations. But yeah, still more to come for sure.
Yeah, and I would just kind of push back. Sometimes you hear this, well, you've got to do more with less. And in this environment and with the challenges of delivering some of these projects and the complexity, I just don't see how, as an industry, we can do more with less funding. And I just don't think that's possible. Just gonna throw it out there.
Yeah, I think we have time for one more quick question. Well, it's a big question. So, for more work ahead. But we do have some questions somewhat related about industry capacity, and also, another thing related to what Susan is saying about state agency capacity. Curious about when we're thinking about project delivery, are there, any important things that you think need to be addressed in reauthorization related to building out capacity? Are there things that are already happening that are important to note?
Yeah, I think the industry always delivers. I mean, whether you look at state revenue increases that really started in 2013 while you had flat federal funding, or you look at the increase in the federal investment, there's always, with those productivity gains, with the investments, that the industry delivers. So I think there is capacity, but certainly some of the things we've talked about, whether tightening the regulations, the streamlining, helping there. I think if you have access to labor, that helps that area a little bit. So there are just a couple of different areas that as things hopefully improve in those individual areas, that will help deliver projects. But again, that pipeline, engineers, all of those folks that are necessary, that's so key at the DOTs as well. And I know Susan can speak to that.
Yeah, absolutely. I mean, one thing in addition, I would just mention because we touched on it a little bit earlier, is that sort of innovation and technology piece. Not my area of expertise. I'm practically a Luddite, but I do think that there is a lot of room there to leverage, and a lot of states are doing a lot in that area, and the federal government can help. I think either help by getting out of the way, or help by, creating a framework for some things that would really allow states to harness what's out there to do more when it comes to digital construction and AI and even more. So when it comes to capacity, yeah, I mean, we have to continue to invest in our people and give them the tools to do, as I hate to say it, I'm not going to say a lot more with less, continue to deliver efficiently and fill in any gaps we see. So I think there's a lot of room there. The other thing too I would mention is, like, just understanding the complexities of the federal program, and the fact that, we are state DOTs are partners with the federal government in that. It does have to be a partnership. So I think that as new regulations are coming online, as we see perhaps impacts of things like our government shutdown and a loss in capacity at the federal level as well, that's a big challenge for us as well, to figure out how to fill those gaps to continue. And I think it's possible that a lot of things that Allison mentioned, as well as innovation and technology, can help with that.
Yeah, and I'm sure most of the listeners here understand, and the reason that federal investment is so important is because the federal aid highway program is targeted towards those major roads in the interstate system that really connect our economy. And it ensures that there are investments being made in those major areas. And it's going towards capital outlay. So construction, right of way, planning and design work. Whereas when you have state revenue increases, Often those are shared with local communities. There is a maintenance, there are other different types of investments that come under that umbrella. So that's why that federal investment, we've seen it really, really move the market over the last few years.
Awesome. Well, thank you so much to both of our panelists for providing your time and your insights. And thank you to everybody who tuned in and asked questions. A reminder that you can find the white paper on our website, and also please check out the organizations represented here today and their recommendations. And yeah, thank you everybody for joining.
Thank you.
Thank
See you
you.
soon.